Hey guys, welcome to episode number 9 of Mind Money Method. I'm your host, Swing Pony, and I hope you're all having a great Labor Day weekend. What I wanted to do this episode is actually go ahead and look back. We've had an amazing series with a bunch of different guests. We've had different insights, tips, strategies. So what I want to do is I want to go back and revisit some clips from each of our guests and sort of walk through what we've learned so far and get a taste of what we'll bring on to the next episodes. So stay tuned and let's get a good recap in. All right, guys. So we've had an awesome list of guests that have come through so far. Everyone from The Rock Trader, Radio Silent Play, Masi Trades, Shark, King Blehme, the list goes on. So what I want to do today is I want to go back and pull a few clips and sort of revisit some of the tips and the strategies that we've learned so far. And I want to start with really the basics of entering a trade, exiting a trade, how to take a loss, scaling in, some of those basic foundations, and go and see what some of your favorite traders like to do and how they like to execute their strategy. So with that said, I want to start with The Rock Trading. This clip from him is all about position size and scaling in, which I think is one of the most basic and most important things as a new trader to get with.
You got to figure out what percentage of your portfolio are going to go into each trade. And you also have to figure out by end of the week, how much do you want to be in cash position? My rule has always been by the end of the week, I have to be at least 50 to 60% in cash. All right. And that means if I have to cut some swings that's just not performing for me, then I have to let it go. So for example, let's talk about position size. If you have, let's say, a $10,000 portfolio, and you should be able to allocate at least, I would say some experts say 3% per trade, but I'd say that's a little bit small. I want to say 5 to 10%. So if you're going to go for a swing, right, your swing should be $1,000 maximum, right? You don't want to go 50% in your swings. You don't want to do 90% of your portfolio just because you have high conviction. Because what happens is that if you put 9,000 out of $10,000 in a portfolio, and every downtick is going to just stab you in the back, right? You get that feeling. And then you can't sleep at night because you don't know what the markets are going to do to you tomorrow, right? So if you do something like that, you're going to blow up your account rather quickly. Remember, if you're going to be a trader, you want to go do this for it's a marathon, not a sprint.
Marathon mindset all day.
Right, exactly. So I would say 10%. Now, with that 10%, let's just say you want to start scaling in. I generally do 3 scale ins. Okay, so if you have $1,000, you scale in $333 at a time, 1/3 at a time. Okay, what you want to do is, number one is to establish where your floor is, right? Where you enter and where your floor or your bottom support. If it hits your support, right? Let's say you buy into the trade, it hits your support and it bounces off the support. I love that. Then you allocate another $333 in. Okay. Now, if it actually breaks your support and it closes under your support, I know this is one of Radio's rule. If it breaks the rule for 2 consecutive days under your support, then you know you have a losing trade. If you have a losing trade, you don't go averaging down on a losing trade. Okay. Right. I'd rather average up on a winning trade, not averaging down if it just continues to break support. If you look at my wish chart, and sorry, wish bulls, don't hate me for this. If you, unfortunately, a lot of people did buy at the top, right, with the recent run to 15. So they're trying to catch the support at every possible dip, right, and loading up for future position. While that is good, okay, but look at how much money or how much of your portfolio size are you allocating to this particular stock. If you are sitting 50, 60, 70% on a stock in your portfolio and it's bleeding out every single day, then I'd say that you need to rethink your future prospects as a trader.
From The Rock. What I think is important here is, I'd never heard of anyone saying by end of week, I decide I'm going to be this much cash. And I think that's a new and interesting way for me to think about my trades as well, too, because sometimes if I take on too many, I become a little more committed to them. And this is a good way, end of week, sort of revisit what's working, what isn't, maybe cut some of the ones that aren't. And then most importantly is the whole position sizing aspect. You can have high conviction, but I still don't recommend going all in on one play because that can really, really hurt. And like he said, the bottom line is you want to go to sleep at night and you want to have, peace of mind knowing that if something happens to that stock, your whole portfolio is not going down with it. So I love that. And what I want to jump into next is some insights from Masi Traders. So she's mostly an options trader, but what she's saying here is relevant to all trades. And it's about having a plan going into your trades and knowing where to set profit targets. Let's dive in. About how do you know when you need to get out? Like when you need to take profits, when you need to accept the loss and move forward?
So I always have a set price target for a profit and a stop loss. So those are the main things that you have to make sure you always set prior to even entering the trade. You need to make sure you have where am I going to take profits? So say, for example, you take a trade, and I just want to show the chart really quick because this is actually a good example. Tesla, I think it was on Friday. Let's see if it shows up. So if you, for example, want to take a trade and you have your entry point on the trade, but you don't know where you want to take profit, you're going to end up taking a loss because you're going to get greedy. And I've seen this happen with a lot of people. They don't have where they're going to take profit, where they're going to take loss, and they end up getting greedy. So here on Tesla, this is perfect. So I don't have levels set here, but I'm just going to set a couple levels that I remember. And I took this trade on Tesla. So say, for example, you're going to take the pre-market high break of 675. If I take the 675 break, my target is going to be my next level of resistance. And my next level of resistance is the 678. Then my second target is going to be my next level of resistance, 685, and so on and so forth. Those are going to be my profit targets. Usually when I'm scalping, I take profit at the first target that I have set. If I do see momentum based off of, other factors, level 2 volume, I'll continue to stay in and scale out. However, if I don't see any of that supporting the move, I will get out on my first profit target. If you do not have profit targets set, and I've seen this happen with a lot of traders, you'll end up taking a loss or you end up giving your profit back because look at what happens, stock pulls back. And what's going to happen is you're going to get out on the bottom of this pullback if you don't have a stop loss.
I have been there just through trading commons many times. Like if you don't go in with a plan and stick to it, because sometimes I'll say, I a lot of times actually like to put my sell orders in ahead of time because that way there's sort of a commitment to, I'm not going to watch the chart and see that the stock is going up and negotiate my profit area with myself, because what happens is it starts going up. It's the whole staircase up, elevator down thing, right? Yeah. And then as the stock's going down, I suddenly have a green trade that I now let go red, and suddenly I'm selling for a loss.
Yeah. That's all too familiar with a lot of traders. And I think that's what people struggle with is because they don't have price targets set. They don't know where they're going to get out. They only have an entry point. They have no exit plan.
So that was a great clip from Masi. Really, it's important to go in with a plan, whether you are trying to determine where to take profits or where to exit a trade if it's moving against you. I like to set my sell orders ahead of time, like I said, because if I don't, I find that I'll watch a chart and a lot of times I will let a red trade go green. How many times have you guys done that? I bet you have. You're watching the chart, the momentum's there, it's going. And then next thing you know, stock's going down and you haven't locked anything. So that's why it's super important to go in with a plan. And just as important is knowing when you're going to exit a trade. So I think a lot of times we go in saying, I want to make X amount, but we don't decide how much am I willing to lose? Where am I going to cap that number so I don't end up holding a bag? I don't like that term. We don't like to be bag holders. So Next, I want to transition to radio silent play, his exit strategy. And this is from his rule of 3, and it's one of my absolute favorite swing strategies. You should look into it. But here's his exit plan. Let's learn about what he does. I want to talk about something because we talked about how we lock profits, but we didn't talk about how we exit a trade. Again, like I mentioned, on Thursday, we saw a deep red pullback, and a lot of people, if they had stop losses set up, would have been stopped out, which is why I don't like automatically putting one in place. So tell us a little bit about, your strategy, your style of exiting the play, and why you do it that way.
Okay, first off, just remember, there is no Mayweather in trading. All right, that's number one. You're going to win and you're going to lose. So be prepared. So the way you lose, okay, you're going to lose honorably, right? But you have to follow these rules. The rules that I follow is 2 consecutive days. If that stock closes 2 consecutive days based on a swing trade, right? I'm not investing because I'm not talking about Bitcoin. You know what I feel as far as Bitcoin. I'm talking about a swing trade. If a stock breaks below my floor on 2 consecutive days, whether I'm using the 200-day moving average or a line of symmetry, if on Monday the stock closes below the floor, if on Tuesday the stock closes below the floor or like towards 330, 345, I know that's the point of no return. It's like I'm at a baseball game and it's the 9th inning and we're losing by 9 runs. I'm going to start to leave that ball game. So that's equivalent. And I want you guys to think of this, right? Think of yourself in a building and you're having dinner with your kids and your lady, and all of a sudden you start smelling smoke. Now, all right, smoke, maybe somebody's burning something downstairs. Now, all of a sudden, you start seeing the sprinklers go. You're hearing sirens, right? Now, all of a sudden, you're hearing alarms, evacuate, right? Are you going to go down to the 5th floor and just wait it out? Or are you going to just get GTFO? I'm going to GTFO. I want to live another day, right? So that's basically how I do it. And I think I sent you a chart on Clover, right? Everybody was jumping on Clover. Clover, right? With Shamat, and no gripe on Clover, right? No gripe on it. And I'm not saying that it's a good one or it's a bad one. But during that time, I said, look, if this thing breaks below this flag, the lower part of that flag, it's going to come down. If it breaks below that line, we're going to come down. You hear me?
Yeah, I can hear you.
Okay, so that stock broke that floor, and sure enough, came all the way down. People were just holding on for dear life. And then what did we do? Silently, when the stock confirmed above the 8-day moving average, got back in, and then the stock rallied higher. It had no need for a tweet, and look what it did. And let me tell you this, you can do this with every market.
All right, radio silent play. I'm telling you guys, there aren't many traders that I have met that put out a distinct strategy that's simple and easy to follow. And his rule of 3 has been the trading foundation for me when I got started. And I still use it a lot. The market's been a bit more of a scalper's market, but in terms of a swing trading strategy, the foundation and everything he teaches is incredible. Rule of 1 is the first rule of the rule of 3 is basically setting a floor and a buy zone within your perspective. And then rule number 2 is basically scaling in. And rule number 3 determines how you exit the trade. And that's both in terms of taking profits, locking profits up to your personal profit margin, and also how to exit a trade if it's going against you. And that's what you guys just heard about. And I love the way he does that, because I know a lot of people live and breathe by the stop loss, but I've had too many times where, the market can be volatile sometimes. I'll be in a trade that I think is great, and then we'll get a really big dip, and I'll get stopped out of my stock, and then it's up just an hour later or maybe a few minutes later. So I love his exit strategy, which is basically what you're going to do is you're going to define a floor for yourself, and know that the floor is subjective. So, your floor isn't necessarily going to be the same as mine, but it's what you consider to be an area of support, whether that's a moving average or a trend line, a line of symmetry. And then basically, if the stock closes under that level 2 days in a row, what you're going to do is you're going to exit the trade. And the reason for this is because balance of probabilities leans towards the stock going lower once it's broken 2 days in a row. Is it always going to happen? No. But I mean, with any indicator, with any pattern, with any trend that we try to follow to anticipate a stock, we work in probabilities. So if this usually happens, I'm going to mitigate my risk and my losses by following this strategy in this plan. So I love the rule of three, and I love radio silent plays exit strategy. From here, what I want to do, speaking of strategies, is jump into Brittney Marie's swing trading strategy. So she had two that she discussed about. The first one is going after offering plays, and then the second one is going after sympathy plays. So let's see what she has to say. So offering is your first swing strategy. What's your second?
So the second one is something that I feel like is probably been my biggest winner over the past few years, and that ultimately has to do with, and a lot of traders who are seasoned know this, the longer you're around, you become like a human scanner. Your brain will know what stocks run under what circumstances, and if one stock runs the other stock in those sectors, which one are you going to?
Sympathy
and so
plays.
Exactly. A lot of people would say, well, what scanners do you use? And I'm like, kind of my brain.
Like, I've become the human scanner.
I have been looking at the screens all day, every day for 6 years. And, there's people who've been doing it 10 years, and obviously they're that good because they know every single market condition. They know what a play looks like under circumstances and how to react very quickly. So for me, I will say and I also have this in my group, and I do it for the members, is if a sector is starting to get very hot, I will automatically alert them on stocks to watch. So this is a very key part for an important reason. So say we're in pre-market, right? And let's go think of because this is actually a stock we're going to cover in a little bit, but the cryptocurrency, Bitcoin run, right? Last week, me and you had actually touched on that when we talked.
I have a watch list I can throw up for crypto.
Yeah.
Actually.
And so that was what I was prepared for ahead of time, because again, I preach to my members, you have to be proactive, not reactive. So if you are, and like any SOS, BTBT, so this is a perfect example. It's like, so if we see BTBT running and you're working a full-time job and you're like, whoa, this has gone up quite a lot. What can I look at next? Or what can I look at a lower price point with a lower risk as a sympathy play that I could take for a swing while I'm at work? And so that's where I come in, and SOS was our personal swing. And we'll dive into that chart in a little bit, but ultimately it's taking the ones that you have a really good, strong feeling that are going to react from that head dog. So I always say head dog, figure out which one that is, pay attention to its movement, and then don't chase that one, because if you can't watch the screens, you're screwed. And then you go to sympathy plays.
So be proactive, not reactive. I love that clip. One of the things you can do, I know Brittney mentioned becoming like a human scanner, and traders who have done that, traders who've been in the business for a really long time, have a better gauge in a sense. They're just more familiar with the stocks and the sectors and the seasonality. If you're newer, that doesn't mean that you can't still jump into sympathy plays. I think the best way to go about being in sync and being in tune with the market is to go ahead and build a few watch lists, whether that's cannabis plays, crypto plays, clean energy, EV, so many different sectors that you can go ahead and build watch lists out for. You don't have to put every single stock in there, but put a few that you're familiar with, you've kind of established a relationship with, their personality, how they run. When you see one stock going off that's within that watch list, within that sector, then you'll instantly have an idea of what other stocks that you can get into without being the person that's chasing the one that's already gone up 40%. We don't want to chase. We don't want to be the one who's buying all the way at the top, because we know that never, ever, ever ends well. So sympathy plays, I think, are a great swing trading strategy. Her other one that she mentioned earlier in the show, if you want to catch it, is about offerings. I know a lot of time when we have offerings, we see a massive drop. The stock will gap down. And if you catch a sign of a reversal with a solid company, that could be a really, really great opportunity to work the stock back up and make money from bottom floor. All right, so we just dive into a lot of different strategies for swing trading, for how to enter a position, how to lock profits, how to exit a play, some swing trading strategies. What I want to do now is I want to move over into options. Options are very interesting for me because I've been recently starting to dabble with them, and I'm realizing that they move a lot differently than commons. You can have a stock that's up 10%, you know, if you're holding shares, but then in options, it could be up 100%. So the other side of that is if the stock goes down, you're experiencing the same in the negative direction. So there's a lot to learn about options, and I asked Shark Trader some of his advice for newer beginners and where to start and how to get comfortable, and he had some really great tips. So let's see what he has to say.
You had to do a quick and dirty, what should beginners know about options? If somebody is watching this and saying, wow, that's intriguing. I have been struggling with this market the last few months. I need to diversify. I'm not sure how to tackle it. What is your advice to somebody who just wants to get started?
What I kind of touched on before, as far as, well, first, I mean, you have to know really if you're trying to day trade or swing trade. That would be, kind of the first question, because it could be two different answers. For swing trading, definitely giving yourself the time on your contracts would be the big thing. But for me, all the Greeks have different kind of weight and their importance. But for day trading, really I'm looking at the delta on a options contract. I'm looking at the theta, the time decay, how much the contract depreciates over time. And the biggest thing is, while you're starting, either start in the simulator to feel how they move, to get used to the options personality, and when you start trading in the real account, just trade small. Like we said, you don't have to risk a lot to get a nice return. So there's nothing wrong with taking 1-2 contracts and getting used to how it feels, dealing with the volatility. I think the biggest mistake is they also go into heavy. They play it like shares. They'll put,
Right.
they've got a $15,000 account, and they'll put in $5,000 or some, big amount, $3,000, and then they're down 30%. That's going to really hurt. And it's not going to be like that being down 5% or 4% in a stock and in a small cap. So, I think the sizing is really important as you're learning, because, obviously the paper trade, you're not going to get the same psychological,
Sure.
Pain or the psychological aspect to it, but you're going to learn about which are the better contracts to pick. Which ones have good liquidity. You always want to see the volume on the contract. You don't want to be trading options that have 300 contracts traded on the day or something like that. You want nice liquid options. So I would really just say take it slow and don't really get enticed by the Wall Street bets. I took super far out of the money calls and I made $23,000 overnight on something, because that's not trading. That's not a strategy that has any type of longevity. Yeah. Those people more than often blow up within the next couple of trades, because that just never, never.
You want
works.
something sustainable. Yeah.
Yeah. So sizing and, playing the safer contracts, which might net you a little bit of a lower return, but are going to save you in the long run.
All right, so really, really great insights from Shark. I love what he said, especially for me as a newer options trader. What I have been doing is exactly what he said. In terms of paper trading, for me, I like to feel the true pain and gain of using my own money. So what that means is I've been playing with I don't care money. I'll take 2 or 3 contracts here and there, something that I'm open to losing if it means that I learn from it. That's how I got started. And I think that's super important, because options are so overwhelming when you're starting to learn about them, especially, all the different Greeks. And then the whole concept of exercising options, which I think a lot of lessons in options really push that part forward instead of collecting, the premium. So it can be really overwhelming. But like Shark said, I think once you start small and get a feel for options personality and really just see how the contract moves in relation to how the stock moves, as well as, you know, the different strike prices. I know a lot of people do the same week lotto calls, and they're super cheap. And sometimes you'll see people post ridiculous gains and the stock took off like crazy. But that's also not necessarily a sustainable way. You may have a beginner's luck experience, or you may take lottos every now and then. But the goal is always to build an options trading strategy that's going to be sustainable and it's going to be consistent. I'll tell you this, as a beginner trader, one of the things that was most overwhelming to me was all of the Greeks, you know, the theta, the gamma, I could go on, but I, you know, talked to some of my friends who are options traders, and I spoke to them, you know, what should I focus on? And that kind of helped me block out some of the noise and start to learn layer by layer. So for me, it's been the delta, the theta, which is time decay, which is super, super important if you're not familiar. Basically, if I buy a contract that expires a week from now, I am going to have theta, which is time decay, eat away at my premium every single day at a much more substantial rate than if my contract were to expire, let's say 4 months out. So the further out the contract is, the more expensive it's going to be, but it's sort of like paying an insurance premium. You're paying that money to have time on your side. A lot of times with the shorter contracts, one thing that I learned personally was towards the end of the week, I'll have the stock still continue to go up, but my options contract isn't moving. And that would be the theta, because the time decay is eating away at my premium. So I'm so close to expiration that I'm not seeing any gains from the stock anymore. So that's a really important thing that I've been assessing as somebody who's becoming more familiar with options, is how far out I like to go, and sort of knowing when it's worth it to pay more for the contract, or when you're, you know, just taking a little lotto play and it's okay to play something just a few days out. In addition to delta and theta, I've been looking at volume, open interest, and IV. So that's kind of my starting point. Those are the terms that I've become more familiar with, and I'm going to get comfortable with those before I dive even deeper. With that said, I do want to transition over to King Blehme. If you're not familiar with him, he is also an options trader. He's actually very popular for being a bit more bearish before other people are. So he has sort of mastered the skill of finding a stock that's going to hit a downtrend and taking advantage of puts. But he's going to talk to us a little bit about choosing the right strike price, because I know that's something a lot of us struggle with. You know, what's the right strike price? How far out should I purchase? So he's going to give us some tips and insights on that. How do you decide how far out on options do you buy? And do you prefer in the money or out of the money?
Yeah, so for me, it's mostly about the liquidity of the contract. So I'm usually trading at the money, just outside the money. So if a stock is $10 or $10.25, I'll be trading the $10 put, you know, or if it's $10.50, I'll be playing the $11 call. That's just because I know that it's like the most liquid and volume. But you do get a little more reward depending on the Greeks and everything if you go out of the money a lot of the time. If you go in the money, you're covering yourself for if it moves against you. Being in the money actually helps you to mitigate that, so you don't lose as much. Your contract value doesn't degrade as fast if it goes against you if you're already in the money. So that's one reason to buy those, but they're a little more expensive. So the benefit of out the money is that they're cheaper, but that inherits a lot more risk, because the cheaper the premium, the faster it'll degrade and be affected by the Greeks, right? So there's a great website that I would recommend using before you enter any options trade, and that's optionsprofitcalculator.com. And you can enter in your strike, expiration, and then the price range that you expect the stock to move in, and you can kind of get an estimation of how that contract is going to fluctuate as you're in that position.
So that was really, really great insight from King Blehme, because that was one of the things I wasn't familiar with. But now that I've been playing with options more and more, you know, I'm realizing, hey, I bought a contract that's super out of the money. Why is my play not moving as much versus something that becomes in the money and I see a much more significant change? So the website that he recommended is actually just something I started playing with. It's optionsprofitcalculator.com. And I'm going to pull that up for us so we can look at it. So this is a really great way to go in, especially if you're new to options, and get an idea of, okay, if this is the strike price I'm looking at this expiration date, how does the price fluctuate? As we get closer to the expiration date, you know, how is the theta, the decay, eating away at my premium? Or if my stock becomes in the money tomorrow, you know, what does that mean? What kind of percentage gains am I looking to see there? So let's break some of these down. I'm going to go in and I'm going to do a long call. And let's just put in, I don't trade Lucid, but I know a lot of people are a big fan. So let's do Lucid. I know we had a bit of a dip this week and we're seeing some recovery. So it pulls up the stock price for you. And then what you're going to do is I'm going to do buying an option. And over here, it pulls up a little table. I'm going to go ahead and do something for, let's say, next week. I'm going to do something really close. Let's do a $20 strike price. So I'm saying I think by next week, we're going to hit $20. And I'm going to click right here. This is basically what buying the contract would be at ask. And let's say I'm going to buy 10 contracts. So I can fill that in right here. And the times 100, that's the leverage that you get with options. That's why you see those beautiful, insane moves up or down, depending on the stock. But that's why options move completely differently than stocks, is because each contract accounts for 100 shares. So I'm going to calculate this right here. And basically what we're going to see is if we hit $20, basically you see how it starts off really green and then it goes red? That's because of the theta, the time decay. So the further out, the closer I am to expiration, the less value my contract has. So let's say on September 7th, we hit $20, right? $20, September 7th. We look at getting a 32% gain, all right? Now, if we hit $20 on the 9th, we're actually losing money. And that's because of the theta, that's the time decay. That's where as a newer options trader, you buy that contract and you go, oh, it expires next week. It's super cheap. I think this is going to happen. I'm going to get it. And then you get close to your expiration and the stock's going in the direction that you want, but you're realizing I'm not making any money. Why is that happening? If you can get this concept down before you start diving into options, you're probably going to save some money. So this is a super great tool to look at. You can even see, okay, if I go deeper in the money, let's say on the 5th, we hit 2060. What does that mean? That's 135% increase in your options premium. So this is a really great table, you know, just kind of play around with it. Try different strategies. Try putting in an options expiration date that's a week out for the same strike price versus, you know, 3 months out. And kind of dive in there and play around with it and see what the different gains look like. And this will give you a good idea as well in terms of the delta and the theta and how some of the Greeks work with you or work against you. Really great website. That's optionsprofitcalculator.com. Highly, highly recommend if you're interested in tinkering with options and don't quite understand how they move. Moving on from here, I want to go into a little bit of the emotional side of trading, you know, the defeat, the loss, the making the same mistakes over and over. Because one thing is true, you know, understanding strategy and technical analysis and trading, that's great. There's a time and a place for that. But if you aren't in tune psychologically with how your mindset is changing during the day while you're taking a trade, if you're falling into reoccurring mistakes, if you're frustrated at the screen, you're flustered, but you're not taking a step back, I think you're not going to put on winning trades. So we had Saint Lion come on, and he is a pro MMA fighter who, you know, battles it out in the ring. He understands the pressures of, you know, the peak of fear and euphoria and being under pressure. So I wanted to ask him, you know, what advice he has for traders who have had some losses and who are feeling discouraged and how to tackle them. So let's see his advice. Question for you. A lot of traders have, especially people who started last year, have seen a more difficult market this year. It hasn't been as easy as it was last year. You know, if you thought you had a grasp on the market last year, this year has humbled you a little bit. It's told you, you got to stay on your toes. You got to adapt. You can't keep doing the same thing if the market has become a scalper's market. You can't keep trying to swing like we used to. You can't keep trying to hold out for 60% profits when the stock goes up 10% and then it goes back down the next day. So a lot of people are facing a little bit of discouragement. I've heard people say, like, I don't know if I'm cut out for this. I don't know if I can continue. What advice would you give to people who are feeling discouraged, who don't have, you know, your MMA resilient fighters background? What would you say to them?
I don't think you need the MMA resilience. It's just build your psychology at the end of the day. You'd be surprised what 15 minutes of meditation does to further your belief in yourself. Because the belief in yourself is what sometimes makes you press the buy or sell button, right? Because sometimes you're kind of like, you don't trust your own gut. So you don't press it and you miss it. I used to be like that. I remember I took a really heavy loss on the EV company, Candy. Candy got hit with the Citron report. And I went hard in it because I was so confident. The EV sector was booming that time. NEO went from 10 to 40. Candy went from 4 to 18. And I went all in. And then Citron dropped a report on them. Then right after Citron dropped a report on them, they also did an offering. And it was like, bullets killed my account. And I remember talking to radio about it. I'm like, I literally, the house that I'm sitting in, I thought I had lost it. Like, it was like, that's where my mindset, I'm like, holy shit. Like, it was my holy shit moment.
Yeah.
And I literally had to step away from the market. I remember I was trying to go into a stock the next day. I couldn't do it. And I saw it run another 25% right after but I didn't buy into it because I didn't trust myself. So I stepped back for like a weekend. When it worked out, got my head clear, kind of like I disconnected. And I came back and I was back. And for myself, it was just, you got to believe in yourself before you can believe in the market. For myself, educating yourself as much as you can is one of the biggest things. Paper trading is good, but I think the emotion when real money is involved is one of the biggest things.
A different beast.
Psychology isn't really involved in paper trading because you can't really lose real money. But as far as learning how to use the charts and the indicators, it's a great way to do it, which is where you should warm up. Then you should start with enough that you're willing to lose. So the first amount that I ever put into the market, I lost. And I was in that same position. I remember I started in March, and in May, I was like, I don't think I'm cut out for this. I had that same conversation with myself. Everything was in red. Every day I'd wake up 4 a.m. just to see if my account would recover. Never. It was 4 months of just red. It was all those plays that I chased off stock quits. And then that's when I had to learn how to cut. I had to learn how to cut the bags. And that was a hard thing because I'm very stubborn in losing, let alone if it's a market. I'm like, they're going to recover. I had to make that difficult decision, cutting it, starting over. And things turned around pretty good.
All right, cutting the bag. How many of you guys have struggled with that one? I know when I first started trading, I did what St. Lion mentioned. I went all in on Mara, and this was back when she was trading. I don't even remember. It's so long ago, and she's been such a beast ever since. But I remember I sort of bought it like the top, and I put all my money in there, and the stock basically just went on downtrend from there. I was down 50%, 60%. And it was so hard for me to cut my losses because every day I would say, no, it's going to recover. And it never did. And I'll tell you what, the pressure that was on me holding on to the bag, so to speak, was so much more than just cutting the loss and starting with a clean slate. And I love what Saint Lion mentioned about, you know, if things aren't going well, if you're having losing trade after losing trade, it's okay to take a step back and sort of just decompress and, you know, start clean, whether that's cleaning up your portfolio or just taking a step back and realizing, all right, I've got some more work to do. You know, maybe I've been chasing plays on Twitter. Maybe I haven't been doing my due diligence. Maybe I don't have a real strategy or plan. Maybe I don't know how to read a chart. Whatever it is, I think it's always great to take a step back and sort of reassess, determine what your strengths and weaknesses are as a person, see how maybe those are going into the market. The good side of it, amp it up, use your strengths. The weaknesses, learn kind of where those are being applied in trading, and assess and analyze and try to keep yourself from making those same mistakes. I think any trader that we've seen who has a beginner story has had that moment of defeat, that moment of, I'm ready to give up, I'm not cut out for this. But I think if we all take a step back from time to time and just reassess before we fully blow up our accounts, we can always come back level-headed with more knowledge, with a strategy, and tackle the markets. The last clip that I want to play actually ties into all of this very, very well. So Jared Tendler was an awesome guest. If you want to catch up on the emotional, psychological side of trading, he is actually a mental game coach for poker players, golf players, traders, and a lot of that psychology carries through in many different realms. So his insights were really fascinating. But one thing that I love that he brought to the table is how many people that say, be an emotionless trader. And at the end of the day, in a perfect world, yes, but we're living, breathing human beings, and we're going to get worked up from time to time. So his whole concept is use your emotions as signals. Your emotions aren't evil, but be aware of them and understand how they're reflected within your strategy, within your process. And so one of the things that he really highly suggests is mapping your emotions and patterns as a trader. So let's dive in and see what all this entails. And so you talk about mapping your patterns. And I love this because you've compared it to when we look at a chart and we look at different indicators, we look at different signals, we look for different patterns, and we try to determine, you know, do I buy, do I sell, do I hold? We can do the same thing with our emotions by mapping our patterns. So walk me through that.
Yeah, so the good thing is that our problems happen very consistently in the same kinds of ways. And so again, like you're charting, you know, opportunities in the market, you can do the same thing for your emotions. And so it's not just your emotions that you're trying to map. You're trying to map the nuances and the details that emerge around them. So you're looking at the specific thoughts that come to mind, the situations where these things happen. And what I would say is actually for those that are looking to do this immediately, focus on your mistakes, right? Your mistakes are the things you're trying to get rid of. And it's certainly the recurring mistakes, the ones that are kind of the most frustrating, that you can't stop yourself from doing them. Focus on those spots, right? So situations where they occur, the thoughts that come to mind as they occur, or soon after, or soon before, you know, or just before. Particular physical tells, right? Like maybe there's you know, you're squeezing the mouse really hard, or you can feel tension in your head. Maybe you're kind of zoomed in, only focused on, you know, a couple of charts. The changes in your decision-making process, right? Maybe you're kind of convincing yourself that, you know, there's a level here when there's actually not. Maybe you're convincing yourself that 4 of your 5 criteria is enough to actually jump in when that's probably not the case. So changes in your decision-making, changes in your perception of the market. You know, basically a lot of the BS that we kind of convince ourselves of.
Absolutely.
If you write all that stuff down, you start to create kind of a profile of those situations. And, you know, don't take one instance as being kind of the gospel for that spot. But, you know, as you continue to do this, you know, easiest way is just keep a notepad next to you as you're kind of going through your day and recognizing certain kind of mental and emotional noise that you don't think is, you know, should be there. The biggest mistake that traders make is they say, well, it shouldn't be there, and so let's just kind of block it out,
Ignore it,
and disregard it and ignore it.
Mm-hmm.
Yeah, versus treating it as a legitimate part of your experience, and it's there as a signal for a deeper problem. Now, we haven't gotten to this part yet, but, you know, as you're mapping your pattern, you begin to get to a point where you can actually understand why those reactions are occurring. And, you know, from a performance standpoint, they're occurring because there are underlying flaws, biases, illusions, like, you know, hindsight bias, the illusion of control, the illusion of emotional control, right? Expecting yourself to always be in control of your emotions. You know, these kinds of flaws are why you're reacting this way, right? And so the mapping of your pattern gives you the opportunity to do something different, right? Just like if you didn't, you know, as a newer trader and you're looking at charts, you don't even know where the opportunities are, right? You develop enough competency, you can start to see where they are. That's what you're doing emotionally, right? And that's where those opportunities start to emerge once you've done that work.
Really, really interesting concept, mapping your patterns. You know, as traders, we look at different things. We look at a 50 MA into a 200 MA golden cross, and we see that as a bullish signal. We see a bull flag break. We see that as a bullish signal. You know, just the same exact way that we apply these indicators and these patterns that we look for within our charts, we can do the same thing with ourselves, is what Jared is saying. And I think that's really key because, you know, the whole out of sight, out of mind thing, it just doesn't really work. I do believe that what you resist persists. So if you're constantly seeing the same issues taking place, just like Jared mentioned, super easy, just have a notepad nearby. Your emotions leading up to certain actions, your thoughts leading up to certain actions. Start to get an idea of certain triggers that you have and certain things that are leading into you creating the same mistakes, whether that's buying at the top, chasing, over trading, revenge trading. It could be anything. But what this does is this sort of gives you a sense of awareness. So the idea is from here, just like you are looking for that 50 to 200 cross as a bullish signal, if you start to fall into the motions of something that usually leaves you down the wrong path or making a trade that you're not supposed to, maybe now you'll be ahead of the game. You'll have the awareness, and this will, you know, keep you from making those same mistakes over and over again. So love that clip from Jared. He does have a book called The Mental Game of Trading that I've been reading that has been fantastic. So if you want to read that, his website should have everything. Highly recommend it. I hope you guys have enjoyed this episode. It was really fun looking back and seeing what all the different traders have brought to the table. If you're tuned in, go ahead and hit the like button for me and for all the traders and everything that they've taught us. You know, like I said, this show for me is really a focus on everything that different traders do, you know, sort of brought down to a simple but significant way that we can all learn from. So this can include technical strategies. This can include psychological mindset tips and tricks. You know, just anything that a trader has honed in on that's worked for them and that they can share with us that maybe we can learn from and we can incorporate into our own trading routine and strategy. So as always, I appreciate you guys tuning in. Go ahead and leave a comment for me. I do want to know, as always, you know, who do you want to see come on the show next? What kind of topics do you want covered more often? We will be back next week and we will have another great guest here to learn from. So hit the like button, have a great weekend, and we will see you next time.